week's precious metals market update. What a difference a week makes. Last Thursday, the Fed said they would not raise rates during 2019, rest of the year. But immediately we saw inverted interest rates that have produced a recession every time interest rates are inverted, where short-term rates are higher than long-term rates coming down. What happens is investors move to safety. They move out of stocks, they move into gold because it's real, and they move into treasuries because they're backed by the U.S. Treasury, the U.S. Federal Reserve. So they come in and do that, and what we're seeing now is people this morning saying a week later, there's only a 25% chance of recession according to the president of the Chicago board up there, Federal Reserve Board, saying it's only 25%, and yet we know historically when you can get more for interest rates on a short term than you can a long term. You usually look at 2-year and 10-year bonds. If you're getting more on the 2-year than the 10-year, they're inverted. That's not normal. That means the economy's slowing down. That means recession's in the air. It means investors are scared. It means investors are headed to treasuries as a parking place for safety. They're headed to gold because gold always does well in a recession. And when they come out of the recession, because they print money, gold also does well. So we've entered a great period for gold. And certainly all you got to look at is the last few days. The dollar went down 0.8%, and gold has shot up over 20 something dollars just since the Fed made the announcement last Thursday. So this is very exciting for us because we now think we're going to see 1400 and then 1450 taken out, and not as a straight up ascension, but the dollar has to go down. It has to go down. So Trump wants the dollar to go down to try to get our trade balances in a better position. He doesn't mind forfeiting the value of your currency. But once again, people are taking care of that in the marketplace by moving to gold and moving to treasury bills, treasury bonds, and treasury notes. So it's a real exciting time out there for you to get placed in the right place. And I'm only going to talk about gold today. We've found some incredible deals through a group of wholesalers that have pooled their inventories. And we had a great deal last week on 1 ounce Canadian maple gold, 0.9999. We also still have the French franc special, but you've got to be looking at history and what an incredible opportunity gold investors have. Stock investors can be up and down, but it still looks like a recession, which will lead to down prices when it gets there. But will this thing be ignored? And will, as the Fed chief in Chicago says, there's only a 25% chance, or is it really 75, or is it 100% chance we're going to have a recession due to these inverted yield curves in the debt markets? So anyway, be aware of it. If you need to talk to us about it, you can reach us at 800-247-2812. That's 800-247-2812. Also, if you're interested in a self-directed precious metals IRA, we can be your broker. We can be but we cannot be your custodian. We can be your representative and broker, but not your custodian. But give us a call. We'll tell you who the good custodians are that we use, and you can roll it over. And then we'll talk to you about what percentage you want in gold and silver, platinum, and palladium's also out there, but as you know, we're not bullish on that right now. So look at it, see what you think, give us a call. We ask for our gold specials, whether they're posted or not. We've got several really, really, really good ones, and certainly silver can go up with it. But this session today is about gold, and what I've said many times, I'll say it again. Why are central banks buying gold at record rates? Why are they getting rid of fiat currency, money by decree, paper money, and moving to gold? They bought over 630 tons last year, and they're on track to buy over 800 tons this year through the figures we have available. So take a look at it. If we can answer any questions, let us know. With this week's Precious Metals Market Update, this is Tom Cloud signing out.